Good morning. Today is Monday, October 15th. This is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Alan Bush, ADM Investor Services Senior Financial Economist, and Mike Niemiec, ADMIS Grain Analyst. Alan, let's start with the financials this morning. What is the status of the U.S.-China trade talks?
Well, right now it appears that they are virtually non-existent. Now, last week there was some talk that President Trump could meet with the Chinese president next month at the G20 summit, but economic advisor Kudlow seemed to backtrack from that a little bit. So basically, it appears that there is very little going on in that regard.
On Thursday, gold futures advanced $34 and traded above several downtrend lines. Can you comment on the reason for this, and if you believe there'll be any follow-through strength in precious metals?
Well, actually, there was some follow-through strength today, and I think one reason why the gold market has advanced is that there appears to be a feeling that central banks around the world may be a little less inclined to raise interest rates too aggressively. Even here in the U.S., there is evidence that the Fed may be a bit slower in raising rates. Now, of course, there's still a rate hike on the table, and it is widely believed that in December the Fed will raise another 25 basis points. But now it looks like there may only be 2 rate hikes next year from the Fed. Now, that is a minority opinion. That's my opinion, not what the consensus view is. Most analysts are looking for 3, maybe 4 rate hikes. My feeling is the central banks may not be aggressive in hiking rates, and that is supportive to the gold market. So there is likely to be some follow-through gains, if I am correct in that.
Finally, Alan, the strength in stock index futures was challenged last week. Sharp losses on all the indices, and the interest rates increasing to multi-year highs. What does this mean for the bull market in stocks? Is it over?
I do not think it is over. I think this is like every other break that we saw in the stock index futures since March of 2009. Every time there was a break for whatever reason, the indices have come back to make new highs. So I think this is just another correction, and I believe there will be further gains, probably some new highs, maybe not this year for the indices as far as historical highs, but into next year, nothing has changed. I believe we will recover and see higher prices across the board in the stock index futures.
Do you believe we'll continue to have good volatility in the market?
I think the volatility will be increased, especially now with the midterm elections coming up. So volatility is very much with us, probably increasing, but the end result should be, I believe, breakouts to the upside.
Mike, let's talk about the grain markets. We ended late last week with the monthly crop production report. What were the highlights of that report, and how did the market react?
Well, it was kind of conversely in here in the sense that the USDA came out with the monthly crop production and the supply and demand tables. The supply and demand tables continued to increase for corn, wheat, and beans versus a month ago, but they were just a smidgen below what the trade was guessing. And actually, this has been going on since July, where we've been having increased carryout numbers for corn, wheat, and beans. And even on our quarterly stocks numbers that we had at the end of September, they too were bearish as far as connotation goes, seeing bigger stocks than where we had a year ago. But nonetheless, all these reports, it just seems like the money flow does not want to go to the downside, only minuscule. And what we get is this money flow that wants to buy the marketplace as opposed to follow the fundamentals. And at the end of the result, at the end of the day, we saw where the corn, wheat, and beans kind of rebounded for the week. Not up for the week, but pretty much near unchanged. And here we are this morning seeing more follow-through buying in our marketplace, with mostly corn and the oilseeds making new highs for the move.
So when you talk about the money flow, talking about the weekly commitment of traders report.
That is correct. As of last Tuesday, the commitment of traders report suggested that from the prior week, the trade managed money had been covering short positions in corn, beans, and soybean oil. They also added to their net long position in the meal. The only thing a little bit conversely was that they were net short the soft red winter wheat, and they added to it. And since that report, as of last Tuesday, if you look at player sheets from Wednesday, Thursday, and Friday, you can continue to see the buying activity that came in those marketplaces to get the trade, manage money in corn almost net even, still somewhat of a modest net short in the beans and in the oil, getting longer the meal and still somewhat net short the soft red winter wheat. And I would surmise after today's early morning action that maybe perhaps they're getting long the corn and once again money flowing out of their short positions in oil and beans and adding to their meal net longs.
So Mike, anything to watch for this week? What are traders looking for right now?
Well, we're a few minutes or so beginning our weekly exports coming on out. Getting back to the USDA report being somewhat of a non-bullish report and still seeing the buying. We did have been to date very strong in our corn export sales versus what the USDA is currently forecasting, and it did raise the export number on the USDA report. That makes sense. But here we are running far behind in both our wheat and our bean sales versus what the USDA is currently projecting, and they left those exports unchanged. So are we still running behind in wheat and beans and finding out that the money flow still wants to go against what fundamentally looks somewhat negative? And we'll find out what's going on with our corn business. Later on this morning, we'll also get a NOPA crusher number. That perhaps given the bean market a little support today, they are looking for a strong crush versus a month ago and a lot stronger versus a year ago. We have the available bean supplies and we also have strong crushing margins. After the close, we'll have our crop progress numbers that come on out. And here we are running a little bit behind versus average. But this week, it does look like we're going to have good clear weather to try and catch up or even see even more advancement for our corn and beans. We're kind of in the neighborhood of around 40%. The main thing is that what perhaps is helping the market to the upside is that we're not seeing a lot of hedging coming in, sell hedging from the farmer up to this point, and the money flow is dictating the price action rather than the physical.
So here we are right in the middle of harvest. What do you see for the last half of October in the grain markets?
Well, theoretically, on the two sides of money flow versus fundamentals, I guess if you were a little bit negative, and I'm still somewhat of a non-bullish type environment in here because of the fundamentals, I guess I would like to see the corn and bean harvest get further along, something like 75 to 80%. I would like to see the trade be shorter than what they really are. That's not really happening. Then if you look at such technical signals such as stochastics, they are quite high in corn, beans, meal, and soybean oil, and something that could roll over if we see hedging and or exports that are not up to snuff, and or once again finding out that our yields are still quite sound going forward in here. Having said that, I guess fundamentally versus the money flow in here, that $3.75 to $4 would be tough to go and over hurdle that, and we're in that getting in that neighborhood for corn, and for the beans something like $8.75 to $9 to see advancement would be a little bit tough going, at least as far as what we know here today. Right now it looks like South America will be the other topic going forward in here, October into November. As far as we can tell right now, as far as Brazil being first, their forward sales are ahead of average and their plantings are ahead of average. So if the money flow is coming in here to do the what if of South America, it's really not on the table at this point.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.